The Central Bank of Nigeria, CBN, has projected a stronger macroeconomic outlook for the country in 2026, forecasting a 4.49% growth in gross domestic product, a moderation in inflation to about 12.4%, and a rise in external revenues to $51.04 billion amid sustained reforms, improved oil sector performance, and easing monetary conditions. In its macroeconomic outlook for Nigeria in 2026, the Apex Bank says the projections point to a realistic window of opportunity for macroeconomic stabilization following the gains recorded in 2025 despite global and domestic headwinds. The CBN notes that global economic growth slowed marginally to an estimated 3.20% in 2025 from a 3.30% in 2024, reflecting lingering trade tensions and weaker demand in major economies.
Over the past year, we've collectively committed to restoring macroeconomic stability, rebuilding trust, and strengthening the credibility of the Central Bank of Nigeria. I am pleased to report meaningful progress on all three fronts, even as we remain fully aware of the work ahead. Our actions continue to reflect the policy direction we articulated from the outset. In other words, we said that we would do, and we have done it transparently and consistently.
However, global inflation moderated to 4.20%, driven largely by lower energy prices and continued normalization of supply chains, while financial conditions eased as monetary policies became less restrictive and investor confidence improved. Against this backdrop, Nigeria's economy recorded a stronger showing in 2025, with growth estimated at 3.89% compared with 3.38% in 2024. According to the bank, this performance was supported by improvements in both the oil and non-oil sectors, underscoring the impact of domestic reforms and gradual recovery in production activities.
From a peak of 34.6% in November 2024, it has more than halved to 16.05% in October 2025. This marks 7 consecutive months of disinflation. Food inflation, the largest single component of the basket, fell to 13.12% in October, down from 16.87% in September and 21.87% in August. This significant steady decline in inflation is restoring real purchasing power for households and businesses.
Looking ahead, the CBN projects that Nigeria's economy will grow by 4.49% in 2026, driven by continued gains from broad-based structural reforms and a gradually easing monetary policy stance. This, the bank says, are expected to further improve the business environment, enhance investor confidence, and support private sector-led growth. The growth momentum is also expected to be complemented by increased production and investment in the oil sector, supported by improved security surveillance and gains from domestic refining capacity.
Our reserves are being rebuilt organically, not by borrowing, but through improved market functioning, stronger non-oil exports, and robust capital inflows. While oil production improved moderately to an average of 1.45 to 1.52 million barrels per day in 2025, the truly encouraging development is the strong performance of non-oil exports.
Headline inflation rate is projected to moderate sharply to an estimated average of about 12.94% in 2026. The bank also expressed optimism that sustained reforms and improved supply conditions will help anchor inflation expectations. The fiscal outlook for 2026 is described as optimistic, driven by sustained non-oil revenue mobilization and continued implementation of the Nigeria Tax Act 2025, along other reforms.
We continue with determination to bring inflation down further. The current double-digit rate cannot be acceptable. Price stability is the foundation of sustainable growth. Our transition to an inflation targeting framework is gaining traction. We have improved data analytics, strengthened communication, and ended monetary financing of fiscal deficits.
The federal government's retained revenue and expenditure are projected at 35.51 trillion naira and 47.64 trillion naira respectively, resulting in a provisional fiscal deficit of 12.14 trillion naira, equivalent to about 3.01% of the GDP.